Hello, everyone. Welcome to the Finance Story, and I'm your host, Vishal Krishna. We are a leading digital publication that celebrates and captures life in finance. Our series, titled Finance Beyond 2022, aims to inspire young and old, CEOs and employees alike. Today's guest is a person who's going to tell us this in perspective, and he's Mr. Kartik Radia, the managing partner at Mazars. Kartik has several accolades. Ladies and gentlemen, I'm going to start from the beginning. He's a CA, he's a cost and management accountant, a company secretary, and he's got 3 qualifications from the USA: certified public accountant, certified information systems auditor, certified internal auditor, and is also a graduate of the University of Mumbai. He has in the past worked with the likes of PwC, WPP Global, EY, BDO, Haribhakti, and the last 2 years have been hard on industry. And that is where my first question begins. You started at the heart of COVID, right? Just before that. Mazars India LLP was born in 2019. Why did you decide on the same? Why go through the challenging path of starting up and setting up a consulting practice?
I had spent about 8 years at BDO, about 8 years with the other big 4 firms, EY and PwC taken together, and about 3 years in the USA. This was around a time when SOX was getting implemented across US for all listed companies in NYSE and NASDAQ. And I got an experience of dealing with implementing SOX at the core of that time when this had come up as a requirement. When I was doing that, and this was my early on career, when I was doing that, I realized that after the big 4 firms, because that time we had big 5, and one of the big 5 firms, one of the largest firms, had got collapsed because of one of the largest financial fiasco that happened in terms of financial reporting. And I saw that there were other 4 firms that were emerging, the big 4 and the next 4. And then there were a host of other firms. So in the US, the concept of Big 10, Big 20 had already started at that point in time. After coming back, I was working with one of the other big 4 firms, which was EY. And I saw the trend because India largely follows US model, by and large in the world. Most of our market also for outsourcing IT services, etc., is sitting in the US as one of the largest markets. So we are one of the largest suppliers of services and one of the largest consumer market for that. So for the services sector and technology sector is US. And I saw that we were broadly going to follow that pursuit of the next 4 and so on. And having seen this early on in 2009, I was the rather first of the few ones who decided to join a firm, BDO. It started with Haribhakti at that point in time. So BDO and Haribhakti collaborated. And that's how it became one of the other larger firms in India after the big 4. And I joined in 2009, looking at that and, with that as an opportunity. And there was, by the way, there was lots and lots of opportunities outside of the big 4 firms. And I made it right up to the national leadership for risk advisory services. And that's how I saw a real entrepreneurship in the professional services business. Again, there were things that developed. BDO had got a split from Haribhakti at that point in time. And then, I went back to PwC. And from PwC, back again to BDO for a short while, and then we decided as a group of partners to come together and start our own firm with a multinational name, and that's how we partnered with Mazars Global, and we started off with Mazars India LLP. We started off mainly in the consulting and advisory domains, largely into consulting and financial advisory services. And that's how the journey started. You rightly said that it was a very difficult time because just after we started and things fall in place with respect to our new firm, we had COVID pandemic hitting us very hard in March 2020. And then we had to take some real hard steps. But the whole idea that has kept us going and evolving and also thriving in some recent past is the journey of entrepreneurship that we believed in as a group of partners that brought us together, that enabled us to stick together in even difficult times. And that has helped us to even put foundation for creating a next generation accounting and consulting firm, which is led by first generation entrepreneurs, means not by families, not by historians, but it's basically,
there's no legacy.
Not second generation.
No legacy.
Yeah. all first generation, professionals. And by the way, it's accounting and consulting. So we also have partners who are from technology like cybersecurity and artificial intelligence and some of the technology domains. So that's how we created this firm, which largely focuses on advisory, consulting, and financial advisory services.
Recently in Bahrain, you were mentioned that 75% of the tasks done by financials or CAs can be replaced by a bot. And what are some of these tasks that get replaced, and why should financials think about this very seriously? And by when will this change or shift happen?
So, Vishal, it's a very interesting question. And if I go back as to what has led me to incline towards technology, is one of my credentials that you mentioned, CISA, Certified Information Systems Auditor. I have been an auditor through a good part of my career, and during the course of this, and looking at it from a technology side, the inclination that came in was through a systems audit approach, and that opened gates for me to learn a little bit more and quite in detail about the technology evolution that was taking place. Fast forward now, the way we see it is that the technology has basically now taken over most parts of our life. I would not just say business, but also our life. You look at you going somewhere, traveling on the road. You switch on a Google map. You travel through a flight. You do a web check-in. So almost every sphere of our life has been, I would say, either you say the word digitalized or technologized, or robotized, whichever word that you want to use, but it's a lot more technology enabled. So that's lot is going on into the business that is getting enabled through technology. As it stands now, fast forward as we stand now, the way I'm seeing, because our 60% of our practice, as I said, is around technology, like artificial intelligence, our robotic process automation, data analytics, cybersecurity, ERP implementations. Because of this, basically what I'm able to take a view is that about 75 to 80% of our business processes in any given business function are repetitive, routine, and mundane in nature. They can be very well programmed and fed into machines. So any intelligence that a human being performs through his mind can actually be fed into machines as rule-based workflow, and that is nothing but artificial intelligence. You make machines artificially intelligence is what is artificial intelligence. So, Vishal, the business case here is that in today's world, we as functional leaders in finance in various domains, we have very little time left. If you look at any business function, a lot more this has become even at a senior level about reporting. It has become a lot more about keeping records, documentation, processes, and so on. So virtually, if you look at it, there's very less time left for focusing on business strategies and formulating key business positions. And by the way, these areas are high impact areas. They're intuitive in nature. And for performing these areas, you need people to do these areas. But presently, with a shortage of manpower, skilled manpower is at any given point of time is short, right? And as a result of that, the short manpower, basically we are using this short skilled manpower to perform routine business processes, and which can very well be fed into machines. If I go back to saying artificial intelligence, can be fed into machines and they can take over, and which will leave basically time for the senior management to focus on high impact strategic areas, for formulating key policies, for taking positional decisions, and therefore the organization can be very well set for the next level of, or maybe higher level of growth.
You're saying use people with financial minds for higher purpose. Don't let them do mundane tasks. Correct me if I'm wrong. That's where you're heading, right?
Absolutely. Absolutely, Vishal. So, you can use finance professionals for making trial balances, by the way, which machines are already doing it in the form of ERPs, etc. But you make them put their time in financial reporting and doing different, like, we had GST. So, a lot of finance professionals implemented GST at a couple of years back. And then there were various other things that emerged. Now there'll be sustainability reporting. So, they just keep taking projects after projects related to reporting. and that is leaving a very less room for really some high impact areas. And if you really ask me, what's the role of a finance function? A finance function is a very strategic partner to business. Beyond reporting and compliance, the key role will be in terms of be a part of the main decisions. The life coursing or course changing decisions, like, to get into new business, ROI evaluations, really putting in some framework around financial and even larger evaluations around ESG, and we'll come to sustainability also as one very important component, but making some of these evaluations and be a part of core decisions, which is what if we replace about from presently maybe 15-20% that is being spent to almost 60 to 70%, if a finance function is able to play that role, that can put organization or all different kinds of progressive organizations to a very different next level of a growth. And that is basically the business case for putting in technology, artificial intelligence, what I spoke about in Bahrain at the conference of the Bahrain chapter of Institute of Chartered Accountants of India. There are few select industries which are doing it, but most of the companies have already started the journey. They are presently at a 5 to 10% nascent stage of implementing it on an average, I'm saying. But I clearly see that in a period of 3 to 4 years, most of the routine, mundane, repetitive business activities around entire business spectrum will be automated. So this is very much a real concept. Most of the companies have undertaken the journey. Presently, it's at a 5 to 10% level, but it is only going to go further on from here.
There is another technology I want to bring into this conversation, which I think has a long way to go, but I want to ask you that because everybody asks me and asks the finance story about it. They say blockchain will disrupt the financial industry. They think it's going to replace auditing. Do you think firms should really consider the possibility of using blockchain? Your thoughts, please.
Sure. So we have to understand a little bit here, blockchain is a concept and as a way of life. Okay. And I have been asked this question a variety of times. People hold really very, very drastically different views on the subject. Some believe that blockchain will replace an audit. Some believe that as a concept, it will not replace, but the way of doing auditing will dramatically change. And I hold the later view because, as a concept, how is auditing? You have to also understand a little bit, how auditing has evolved. So typically business organizations, they come and publish financial statements, they come and make assertions. They come and say that, okay, here are my financial results. So the investors please come and invest. Here is how we pay taxes. Here is an auditor's report, an independent auditor's report. And now, by the way, we also got rotation, which has got started. So auditors also change over a period of 5 to 10 years, from companies. So you will not have the same auditor going, through the lifetime of a company. So now with this evolution, you had a management and the company owners and shareholders on one hand. So the management used to make an assertion. They used to publish or give the financial statements. You had a machinery of an independent audit, which used to give an audit report. And that's how the larger ecosystem, the capital markets and the regulators and everybody around the world, they relied on this independent audit machinery. Now with the blockchain, what's going to happen is you will bring in a lot of transparency. You will bring in a distributed set of databases in the form of distributed ledger systems. That will make systems more transparent. Blockchain will not allow you to go back and open up previous financial years and make the entries in your systems, because what has happened. There'll be a timestamp. And once a block gets closed, a block is nothing but a block or cluster of data. Once that is filled, it will be closed. And there'll be the next block, which will be linked through the earlier block through the chain. So that is blockchain. So it will lend transparency, it will bring security, it will bring governance, but underlying transactions will have to be still validated. So the underlying transactions will have to be still validated and assurance will have to be given that the transactions happen. And as a concept, imagine you always need an independent assurance, an independent validation from what the management is saying, so that the investors, regulators, and the larger outer ecosystem can rely on it. So blockchain is not going to replace audit, is my very strong view, very, very firm view. It's going to change the method in which the audit is going to be done. So the auditors will deploy a lot more technology in terms of evaluating the security of the systems, in terms of seeing whether the blockchain is fit for purpose, is meeting the objectives, but it is not going to replace the auditing. It is going to be furthering and enabling a proper ecosystem of transparency. But auditing existed, as I keep saying in my discussion, when I'm always asked this question, it started from India 2,300 years ago, as a part of Arthashastra Niti of Kautilya Chanakya. It existed then, it was delivered. It was very well happening at that point in time as an audit over the kingdom, because at that time the economy was managed by kingdom.
Yes.
So it is very well managed now. It has been getting delivered, and it will always be the case. Even next 2,000 years, I believe auditing will always exist.
Brilliant. Guys, we have to appreciate what Kartik just said, simply because, yes, AI, machine learning will replace mundane jobs, then they'll do it at scale. But in terms of using blockchain, auditing will be, it'll not supplant auditing, but, actually complement auditing, because you guys are making the higher decisions. And this will just create transparency within the ecosystem that you audit between the multiple parties. So that's something that you guys have to remember. And that's such a valid point that you brought in, Kartik. And I'm so glad we had this conversation on this. There's another topic that people talk about, crypto, right? Crypto and blockchain are linked. Then there's something called crypto, which everybody is now saying, okay, let's hedge risk in crypto. How do you look at this changing world?
So blockchain is based on the underlying technology of cryptography, and that's how people have started using the word crypto. A lot more it is used in the context of cryptocurrency, but the concepts are not very widely different. Basically, it's based on the same mechanisms of trust, transparency, and security. So in the crypto world, I believe that there are going to be really some good opportunities for professionals, for accounting professionals, finance professionals, and that is in the area of technology assurance, security assurance. I call it as a term called digital trust. The trust that can be given in the digital format. So entire blockchain system, whether it is trustworthy, security needs to be checked, and the trust needs to be given basically in the form of assurance. And then the fitness for purpose, whether this technology is basically fit for a given purpose or not. So that's a very important role. And even coming back to also blockchain that we spoke about, the auditors need to really understand the evolution of blockchain. They need to be a part of this evolution. In fact, all the auditing institutions, auditing firms need to be a part of this evolution process, because it's going to impact each of the auditing firms in the way in which the audit has to be done. So therefore, they have to be a part of this journey. In fact, they should be leading the blockchain implementations from the forefront. And that's how I at least look at how accounting firms and auditing firms should play a role. Until now, all the financial reporting, financial measurements that we have done, based on which the capital got invested, based on which most of the decisions happened, which were financial parameters, is now basically there is a thinking, and which is very, very rightly so, as to that, fine, you are delivering a net financial value, you're delivering a good return on investment on capital, but what about losses that you're bringing to the environment? So how are you on the environment front? And in a wider context, it's called ESG, environment, social, and governance. So how do you stand on these three very important areas is how it is coming to play. I believe that the finance professionals have a very important role to play even in sustainability, because it's going to be a lot more about measurement around the net zero concept. You'll have to intensely measure what are you doing to the environment at every work step. Are you positively contributing or are you negatively contributing? So on one hand, you are contributing financially on your financial goals, on your capital goals. On the other hand, also on the environmental goals. And that's where I believe that finance and accounting professionals have an immense role to play in terms of reporting. And this is going to be not now on debits and credits and the double entry system, but it is going to be around non-financial parameters. And I believe that accountants and finance professionals are in a best position to do it because they've understood the financial measurements very well. So here is where they have to do an ESG measurement on some specific quantifiable parameters. Both goals and even results need to be properly measured. So that is how sustainability is coming up, and a very important way of looking at life. That's going to be the way of the future, and accountants and finance professional has an intense role to play in terms of reporting, measurement for both the goals and also the results. We'll have to have sustainability standards as to how goals are formulated, how goals are thought through and reported, and how the results are going to be reported. So you'll have a whole host of sustainability reporting standards that will be coming up for reporting on sustainability in the same way as we have for financial reporting.
You are a leader yourself, and you want to talk about certain things to do with leadership, retaining talent. But they say 2022 is the year of the great resignation. Do you see that happening? How are you looking at recruiting the next generation, and your thoughts on the great resignation by itself?
Sure. So, by the way, great resignation is already happening. It's very much kickstarted in India as well. We as a market, as I keep saying, as I've told you, we as a market are not very much different from how the US market is, because a big part of our market is also in the US, and anything to do with the new age technology, next gen, there is a concept of great resignation that is applicable. Now, we also had a similar concept post the Great Depression, where a similar thing that came up, for a long time, there was a huge stagnation. And then again, you had got a huge spur of business activities, and therefore a large boom that came up after the Great Depression. So similarly, pandemic was not much different, I would say, of a similar magnitude as the Great Depression. I would clearly say, and even we are seeing even the after effects even now with some of these lockdowns and things coming up. So when we had post the second wave, and maybe in some other countries, some other waves like third waves, etc., we have suddenly seen that there is a concept of great resignation. People just want to leave early, and there are no clear reasons why people want to leave earlier. People had a very clear vision about growth, and growth led to, if you pay me an X and there's maybe a hike on that, people would like to leave. But there are very, very different reasons why people want to live now, and very different models of even employment and workforce engagement that is coming up, which means people do not want to stick to the old traditional models of employment, coming to office, going by standard set of bureaucratic processes and things. They want to be free. They want to even enjoy their life. They want to do something and be very, very purposeful, and that is what is evolving. So that is a very much an applicable concept. Currently we all are facing it, and almost in technology domains, you see a person coming up every 6, 7, 8 months. He says that I want to leave, and at times you're able to retain him, at times he will go and do something else. So my view here, Vishal, is that slightly we have to have, and even it is both ways. While the employers need to understand, even the employees, I would say, need to be, my personal view is that they also need to be thinking about this slightly long term. And the only way which can bring entrepreneurs or employers and the employees together on a common plane is through entrepreneurship. And if the concept of entrepreneurship and an entrepreneurial journey is well understood between an employer and employee, and if the results are well spelled out, because it cannot be just one way like an employer's way, or cannot be one way just an employee's way. But if this is very well understood, and the value addition and the long-term growth are the two major factors, even if employees would keep in mind, particularly the next gen and the Gen Z, I think it will really make a very big difference. Like, for example, ESOPs, working in a company which is maybe an early stage but has a big potential, and an employee, let's say, who's at a middle management, goes and joins as a senior management guy and gets an ESOP, and that's a very different way in which an entrepreneurship can be kicked into this concept.
I also want to know what are some new areas of practice that you see evolving And why is that important for a financier or a chartered accountant, any finance professional to keep note of or be cognizant of?
So I use the terminology called business alliances and partnership. People have realized that there's a lot of growth and a lot of opportunities that are sitting in within this partnership opportunities. So where, let's say, a technology product company stops because it has product, it doesn't really know all the applications of that particular product. On the other hand, we have a professional services firm like ours who understands more about business applications and processes, maybe little less on the technological formats of some of these OEM products. And if we are able to do this kind of partnership, let's say we have done already partnerships for RPA. So we work with the OEMs, let's say the top 2 OEMs for RPA, similarly for chatbot, similarly for blockchain. So all these products which are there, which are there as OEM products, partnership with professional services and accounting firms, I think that's a very important opportunity. They can together bring a very solid synergistic value that they cannot individually go out and do to their customers.
So you can partner with law firms, other accounting firms, technology, whatnot. Right?
So when it comes to law firms, arbitration, investigation, expert witness, intellectual property, dispute resolution, litigation support, in all of these, there are financial areas, evidential areas, and where maybe while lawyers understand the law part of it, to really put procedural parts to it and create evidences and bring those elements into it from a financial angle, business angle is where an accounting firm can play a role. So that's what also I said, business alliance with technology companies, business alliance with the law firms, by an accounting firm. So that's first area, Vishal. I also believe technology consulting, there's an immense role that a technology consulting, in the form of implementing some of these high-end projects, technology projects in the field of automation, enterprise projects, data, AI, blockchain, all these implementations will call for experts from the finance domain, accounting domain. So that's the other area I call technology consulting. Third is cybersecurity. I already spoke about it. Apart from the general cybersecurity, specialized cyber technology implementations, there are OEM products in even cyber security. OEM means original equipment manufacturer. That's the old term that we use. Even it applies to the software manufacturer. So IDAM, threat intelligence, smart contracts. Some of these are there are products in these elements also in the cybersecurity space. So implementation of these in the cybersecurity area. And last and very important thing is the ROI evaluations, feasibility evaluations, fitness for purpose evaluations, capital governance. I think some of these are very important, which finance professionals, accounting professionals, can play as a new areas of practice as all of these gets evolved.
So thank you so much for being on the Finance Story and for our series Finance Beyond 2022.